So then just quickly, how are you feeling about the portfolios? We're at the end of 2024. I mean, they look fantastic. Things are going really well. It's had a bumpy ride, maybe a bit for Fund 5, but now it's coming out the other side. What do you think, Ryan?
No, well, I mean, I think it's really nice to see, we have to work with a couple of different cycles. We have the technology cycle, then we have a capital market cycle, and we have a political cycle, and all of them impact, the perception of our companies and the underlying growth of our companies. And I think it's true that the political or economic cycle, if you will, has put a dampener on the demand of next generation software for some time. I mean, this downturn, makes large companies cautious, and they are the customers of our portfolio companies. So to see that they still have been able to grow, I think all of them in the excess of 25%, and most of them well more than that, is a real clear data point that our companies are also gaining market share, not just rising on a rising tide. So I think that's really good. I think also this kind of tougher period we've gone through has improved the fiscal responsibility of the type of companies we invest in a whole lot. I mean, we've had a couple of write-offs. So these are founders who were not able to either take our advice or nor adapt to the world around them. And they become, maybe they are still alive, but from a valuation perspective, they have become quite irrelevant. But the vast majority and all of our largest investments have really turned around beautifully. And then now when we have first a new technology cycle with a shift to AI, which will be the biggest shift in my career. So as much as I was excited about both PC revolution and .com and mobile, this is not just a device revolution, it's a complete change of compute and the interaction between the physical world and computers. And then we have led by public markets, which is very typical. We have a new capital cycle. So the public markets have, of course, been very, very bullish now for a year and a half. The private equity community, as they often are, is slow to follow. So I think we're just starting to see that ease up a little bit, but still pretty tight, I would say.
Yeah.
So I think for scale up companies, for a better word, growth stage companies, I still think capital is actually quite scarce. And you see that because when you see that there's a rebound in capital invested in private technology companies, if you take out these mega rounds into the foundational AI businesses, it's still a really weak market.
Yeah.
Right? I mean, 53% of all capital this year spent in the whole sector is on a few mega rounds on foundational AI. So I think that distorts the picture and makes it look maybe easier for the founders than what it is right now. I mean, it's still a buyer's landscape, so that's been very good for us. So we have, as this slide showed, we have, invested an absolutely record amount. It's probably been the most hardworking, busy, active year of our whole fund history, to be honest.
Yeah.
With both many new investments, like at a cadence higher than we've ever been before. And also several follow-ons, and many of them priced very, very attractively. I mean, not just compared to 3 years ago, but I mean attractively compared to any historic measure of what you would pay for software companies.
Yeah, and you're right that the bigger companies, the bigger names seem to have sucked up a lot of capital. They've contributed a lot to that growth in the markets. The S&P, I think, will be up to the second year over 20%, which it's only done 3 times in the last 100 years.
Yeah.
2 years on the trot. But what's interesting is there is still room for the companies outside the Magnificent Seven and the big guys to start coming up. And it feels like the environment is improving for everyone, right? It's hard not to think about the election in the US and what's going on.
Well, I think before we talk about the election, I would say there was a really important moment in our space, in the software space, related to AI last week, because the first company that was able to, in the public world, to report that there was a material positive impact on revenues based on agentic AI was Salesforce.com. So anybody who's interested in the space should definitely read at least an AI summary of their whole quarterly earnings report, and then the Q&A that followed, because that's showing a little glimmer of what may be possible with these tools, and may mean that SaaS companies over time can take a larger share of the total OpEx of general companies and industrial businesses. To be seen, but it was a good early indication in a year where almost all of it has been fanfare and hype rather than any form of yet economic reality.
Yeah. Are you still a fan, or fan, maybe not the right word? You still like Salesforce?
Yeah.
Going forward?
Yeah.
It's still positioned well, you think?
Well, I think software always gravitates to the largest companies benefiting more than the rest. And then I think generative AI is going to absolutely make that move even faster, because the capital resources you need to be able to deliver really good, let's say co-pilot type of products for you, like generic language. You need to be large, and you need to be really well funded, and I think there is a number of companies. It's not for this debate because they're all public, but I think there's a number of larger software companies under the Magnificent Seven that sit in a really good position.
Yeah. So then let's broaden then a little bit to reflections generally on 2024 markets. The elections obviously had a big impact. You look back on this year, it's been a good year. Right, I think for us it's been fantastic.
It's been an incredible year.
Yeah.
I mean, it's just incredible, and so nice to see how many of our largest holdings are really performing. I mean, we have a couple of standouts, like the performance of ConnexAI is outlandish. I mean, the quality and speed of execution of Nick and his closest team is very rare to see. And I would say incredibly rare outside of US. Also, the way how they have basically started with a modern omni-channel suite and turning it to omni-channel with co-pilot effects, and then seeing their customer base basically saying, we only want the co-pilot, and it was demand-led how the business shifted to be much more of a pure vertical AI business. I mean, it's really their customers that are seeing the benefit. And that's quite exciting to think about. And then, it's hard to pick between them. I mean, if we see what Leolabs is doing, growing from being kind of focused to deliver for SpaceX and NASA to now winning, defense department after defense department and space department after space department. I can't share too much about these contractual situations. It's such a secretive space, but I think the market opportunity for Leolabs, and with the new CEO Tony coming on board, who's really experienced from the defense industry, I think we're looking at another really, really large company in the building. And then, I can go on. I mean, we talked about Headway. I mean, it's very rare you close a deal and you get a $70 million ARR beat, on the first board meeting 4 months later. I mean, quite special. And I could spend a whole day just talking about how they've created an internal structure where you have a lot of small nodes basically competing against each other in a very organic way, and how that allows for this kind of super scaling. So that's really good. And that's just three of many examples. Then, of course, within all of that, we do have a couple of, I would say, really good, solid businesses, but are still in more of a transition back to growth phase. So they're doing something at a good scale. They are growing. The technology is definitely maturing a lot. And the question now is, can they get back to kind of hyper growing? So examples of that would be HackerOne and Typeform. I spent a lot of time with those new leaders now to see if we can bring that back to a 40% or 30% growth rate. But I would say the beauty is in any rate they grow now, so they're both more than 100 million ARR businesses, is they have a very clear path to exit over the next few years, whether it's to kind of a large private equity buyer or it's to the stock market.
Yeah. And so going forward then, I mean, obviously AI is a big theme within our portfolios. Where do you think AI has got to now? Because there's now B2B applications, B2C applications, which is something I know you're quite interested in pursuing a little bit more. Maybe explain to everybody the kind of differences and how that kind of breaks out a little bit.
Yeah, well, I mean, I think it's important to recognize that AI can never be a theme. It's a change in the computational foundation. So the better analogy is like if you're building desktop PC software that you sell as a perpetual license, and then comes the internet. Then internet is not a theme, right? You either adapt your software to that, which Microsoft did, Google did, whatnot, and then you live on, and you deliver the software in a different way. The software looks and feels different. It feels a factor of 10 better. Or if you don't, you become Sun Microsystems and nobody will remember. There's no in between there. It cannot be a theme. It's foundational and it's essential. Just like Callum is sitting here in the room. I mean, he and I are betting that the next phase after this silicon-based AI will be quantum-based AI. And once that comes through, maybe in 10 years from now, it's not going to be like, oh, no, but we'll stay at silicon and we'll be fine. No, it won't. So you have to shift with that. Because when you get these step changes in computational power, it impacts the whole ecosystem because it impacts what the software can do, how much data it can process, how quickly it finds something of value, but also the UX, how you interact with the software. I mean, now if you start a company now, you can build a whole software business that only works in voice. Or you can build a software business that only resides inside WhatsApp or resides inside Instagram. It's not even an app, right? That was unimaginable 24 months ago. And so we will live and die by that sword. Every single company is going to be pushed in that direction, or we're going to go out of the business. So it's not a theme, it's everything. Then within themes, we can talk about what type of customer are you addressing? And as I said, I mean, I do think it's an exciting when you operate in the private capital markets, call it VC, call it private equity, that there is definitely a lot of herd instinct. It's a article driven, it's a buzzword driven, it's a go to event driven industry. And right now the rage is obviously enterprise software, very broadly defined, because sometimes it's SMB and sometimes it's mid-market, sometimes it's really enterprise. And I think that has created a really interesting opportunity valuation-wise to balance up a bit against that and look at businesses like Headway, for instance. But that's more, I think, more a play on the capital market volatility than a fundamental change. I think thematically, I would say I still think using AI-led software to better understand our health and mental health to try to fix the globally broken Medicare system. I think that's a really, really large market. It's a tough market because it's highly regulated, at least on the kind of effect side, but there's a lot of preventive health to do that is unregulated that I think will proceed in forms of value generation. I see no reason why a company of the size of Google couldn't be built around health and tech. I think defense is incredibly important in the world today. So I mean, we're definitely putting eggs in that basket, and I think with defense, I don't mean that we're going to be in the business of weapons, but I think there's a lot of protective technology that will help give early warning and help understand what goes on better, like using quantum sensing against drone attacks, like using Leolabs technology again for early warning against nuclear attack. I mean, the budgets that are being kind of put on the table for that, the push from, I would say, the soon-to-be new government in the US to make sure that European countries also spend their 2% or more is opening up just massive wallets that I think these companies can really tap into.
Yeah, so luckily we obviously have quite a large exposure to the US.
I don't think luck is anything to do with that.
Well, it does feel like the US is kind of turning, kind of reaching a new paradigm going forward again. Things are changing there quickly. How do you think about playing that via our, I guess, which is quite heavy European portfolio?
So, I mean, I think first of all, I mean, on the election, I mean, we're an apolitical organization, but I think it was very good that the election result was quite clear. It was a clear winner, and that gave the new government a very strong hand to play. I think the fact that this new government is probably having the closest ties to the technology industry in all of history.
It's incredible. It's incredible,
I mean,
the positions that people
it's
are coming into.
quite fascinating. I think that's really, really good. And kind of this push, whether it's going to be there in reality or not, is to be seen. But this push towards small government. I mean, we see that a year in now in Argentina. You know how the guy who was supposed to be the madman actually is doing some really positive change.
Yeah.
And the Argentinian peso has never looked stabler in the last 20 years than it does right now. You know, the gap between the black market price and the official price is almost zero after a huge arbitrage. So I think there is a really strong undercurrent in the West of smaller government involvement, less regulation, which is really, really good for innovation.
Yeah.
I mean, just in the last couple of days, even from Europe, is obviously loves regulation and involvement. There is a shift of tone to the better.
Yeah.
Even out of Brussels.
Oh, you think so?
Yeah. I think just in the last few days, I mean, I think 2 days ago, it was announced that, you know, the new kind of head of anti-competition, forget her name, was that they're going to renew their view and factor in innovation and Europe's ability to be part of innovation to a greater degree. So, you know, the political machine will always move quite slowly, but I think it's more important for us to look at direction than absolute.
Yeah,
so
yeah.
I'm really positive about that, actually.
I'm glad you say that, actually, because a lot of the media in Europe at the moment is very negative on Europe. Obviously, France is now having its own problems from a governmental point of view. There seems to be lots of roadblocks, whereas the US seems to be clearing everything out of its way to move forward. Maybe that's more of a story. So I'm glad to hear you say very positive about Europe.
Yeah, and, you know, it's interesting also when you say that, because maybe this is heresy, since our LP base are, you know, like us, you know, quite old. So when we talk about media, we tend to think about print and TV, right? Which actually is quite a small part of media today. And when you look at the larger part of media in terms of amount of eyeballs, amount of viewers, amount of readership, you have to go to places like Reddit, Substack, Discord, where we're an owner. But most of all, you have to go to the various meta channels. And I think it's very noticeable how the tone is more positive there.
Okay.
Than in the slowly getting marginalized traditional media.
Okay, interesting.
So maybe this is like a little bit old man grumpy, young man excited.
Yeah,
which seems to be a permanent feature of history.
Yeah, that's true. And you know, you've got Klarna, you've got Revolut, you've got some really big companies coming out of Europe, maybe in sectors that Europe have traditionally been quite good at, you know, financial services, etc., maybe farmers. Maybe those are the opportunities.
Yeah, I mean, entrepreneurs tend to be positive, but also often very realistic. And, you know, if I'm speaking or messaging to Nick Storonsky or Sebastian Klarna, I think they are really, really positive about what they're seeing in the world right now and the opportunity they are given and how they're products are becoming very widely, adopted.
Yeah, definitely. Revolut through 50 million users is just extraordinary.
Yeah.
And I know a big part of what we're going to be working on next year is creating a roadmap for our European companies to break into the US as well, right? So we're kind of being more using that corridor that we have even more so.
I mean, I think one of our strengths, the strength of GP Bullhound, is we are quite a multinational business. So hopefully we're not stuck in one national corridor of opinion, right? Or inside one echo chamber. And I think that in turn helps us not just by inspiration internationalize our business, but it helps us in action to internationalize our businesses. So to see how we are, this year making big steps with both Connex and Playtomic, is really establishing them in US. And I don't mean just putting, somebody on the ground. I mean, really shifting the strategy to US, but at the same time also really establishing Leolabs in Luxembourg and in France, coming from Menlo Park, coming from US.
Yeah.
How we can take Q Control, which is, originated from Sydney, Australia as a company, but a lot of scientists from Silicon Valley, and how they are working with us to also become a voice in Europe. They have a small team in Berlin. We're now looking at maybe whether we should put another team in either Helsinki or Copenhagen, which are the two big areas for quant technology.
Yeah.
So I think we can build corridors in a lot of really attractive directions.
Yeah. Okay. Well, that's great. So looking forward then to 2025, I know one of the things a lot of the LPs always ask me is what you're thinking about the markets in general. Away from our portfolios, they love to know what you're investing into. What are you thinking about the markets and your own personal portfolios going forward?
But I mean, or if we start at the macro level, right? I mean, the market forgets so quickly, but up until 6 months ago, everybody was worried about the ghost of inflation, the ghost of unemployment, stagnating economies. I mean, you don't have to go that far back to find all of these The Economist articles about stagflation. Europe, US is becoming Japan.
Mm-hmm.
Now, in fact, even Japan is not Japan anymore. It's growing quite nicely. So just reminding everybody that I think that shift on the macro level has already happened. And I think it's reasonable to believe that interest rates will gradually continue to come down to more of a, let's say, normalized 2.5% level. I think in typical order, I think the Fed and US will lead the way, and Europe will watch and follow. And I think that's secularly positive. But I think in our job in this industry, I think the technology cycle that we're going into, this shift into a whole different type of compute. And I don't want to use AI all the time because people say it too much, but the ability that what we can do with software and with vast volumes of data is really exciting. But it will absolutely, in my opinion, follow this Gartner hype cycle that I think every technology I've been part of has followed. So now we're in that early hype curve, and it's going to reach some peak of hype.
Yeah.
And then there will be a deep and painful come down to find this trough of disillusionment when nobody believes in AI anymore. We're like, look at it, Microsoft Outlook didn't make any better emails than before. We're still stuck in the same Slack and stuck in the same Zoom and whatnot. And there will be a repricing level at that point. And then I think we will start seeing maturity and real business efficiency come through, because I think what the type of compute we're doing now, you could maybe solve cancer, and then it's not so important, how fast you write emails. Maybe these first applications are a bit banal.
Mm-hmm.
And that's going to take its time. And I would, if one could guess exactly when these shifts come, it's impossible. I think our job is to continue to invest through the cycles. When it looks too peaky, we typically invest less, and when it looks really cheap, we try to invest more.
Yeah.
Now it's been really cheap for a while, and that's really attractive, which means also the funds are fully loaded. I mean, we've almost drawn all the funds to their max. I mean, we've deployed Fund 6 faster than any other fund.
Yeah.
Whereas Fund 5, we deployed really, really slowly because it was hard to find good value in the market.
Just a quick question on crypto. Crypto seems to be back.
Meme coins.
Yeah. What's your take on that? Obviously, the price of Bitcoin has been incredible.
Yeah.
It kind of bounced off 100,000. Is that something you believe in, or?
It's hard to say. I mean, 21 million Bitcoins, 10 million left to mine. They're going to get increasingly expensive if the theory holds up. And I think there's a large part of society that have a lot of lack of trust for government. And then you can argue that alternate currencies and alternate ledger systems are kind of a safety play against the crazy of government, if that's where you're coming from. I still think the US dollar is quite a safe haven myself. While I think that government should be like Adam Smith, should be quite a silent hand, I don't believe in a governmentless society either, because it would become too polarized. So who knows? I mean, for me, I think that, as I've said on so many of these calls, I think the underlying technology of distribution of knowledge and traceability for reasons of safety and safekeeping over hundreds and maybe thousands of years of time is really, really fundamentally important. When you make like derivative plays, like put a currency on top of that, I don't think I'm the right man to answer, because it would be like there are many people probably make good money doing, options layers on top of a Microsoft or a Google as well. But that's not my job. I try to look at what is Google doing. Okay, so their search engine technology is probably quite exposed to ChatGPT. I mean, I don't search anything on Google anymore. But on the other hand, the shift to online advertising keeps on never ending. And so they benefit there. And the really, really good work they're doing with DeepMind, will that maybe generate another company the size of Google? Possibly. This is my job. And then if people trade on top of that, I think there are many who are better traders than I am.
Yeah. I think sometimes there's a danger that people get caught up in, they see Bitcoin doing so well, they start getting caught up in the meme coins.
But you could probably ask Callum to do, like, for every of these quarterly calls, the amount of questions you get on crypto and then how it's performed. And I would believe it's a deep lagging indicator. So when you get questions here, that means it's at a temporal peak and you should be selling.
Yes, exactly.
And when nobody's asking you, we should be buying, if that's your hobby.
Yeah, completely. It's like when your taxi driver starts talking to you about something, it's the time to sell.
Well, I didn't say our LPs are taxi drivers.
It's an interesting question, and I'm not sure how much time we've got left for it. But your view on the power of brand for portfolio companies, is that still as important going forward?
It's a really good question.
It is. Maybe another one for another time.
No, I mean, try to be brief, but I think brand is always very, very important. Now, the deeper question is, how do you build brand? And today, with product-driven marketing or programmatic marketing, you can build brand in a way that's quite different from the old idea of putting a billboard on 101 going up Silicon Valley, right? Which was kind of the era of Oracle and Microsoft and Google. But I think in the end, if I look at, for instance, how much attention Playtomic gets for its brand, Vivino gets for its brand, Discord gets for its brand, maybe you investors don't feel it as strongly here in Europe, but for instance, Whoop is a very, very strong brand in US and in the Middle East. And I think Revolut is another great brand in the building. I think all founders need to think a lot about brand. And I think maybe think first product, then brand, and I would say almost last about financial model, because I mean, a lot of great companies start with a tough financial model, because the toughness of the financial model typically to me shows there's a really large total addressable market. I mean, people forget now how everybody complained about it was impossible to make Spotify profitable because they had to pay away 70% of their top line to labels. But now the 30% they still have is enough to make a really serious profit. Even more criticized was Uber. Super difficult, millions of cab drivers, regulation in every country, etc. Can you ever turn it profitable? And I think Amazon and other such case, if you really believe you have enough of a market to go for scale, you may have to be willing to withstand a long period where your business model is criticized, as long as you have the best product and the best brand.
Yeah. Okay. So one last question, though. We just got our last minute and a half. Lindsay, hey Lindsay, she asked another really good question, which you could spend 15 minutes on. It feels like everyone is waiting for everyone else to pay higher multiples. What will start the domino effect?
I think the public market has already started that. And now when we get the government shift in US, this enormous wet blanket on inability of the big technology companies to acquire anything is going to ease up. And then the corporate buyers is going to bring the multiples back.
Okay.
Not financial people, because the strategic value of some of these assets that we're involved in, as well as those we're not involved in, is for, if you're a big tech like Adobe, Salesforce, Microsoft, is absolutely worth paying for.
Yeah. Which is something Lindsay would know about, having next company that way. Okay, well, look, we're just on the hour now. Okay. So that's perfect. So thank you so much. Any other closing thoughts? Or
well, we should say Merry Christmas.
Yeah, we're allowed to say Christmas now.
Yeah.
Trump's president.
Were we not before?
Apparently not. I don't know. I lose
it's been a really, really interesting year, and I think a turning of the tide after, I have to say, 22 and 23 was, that was headwind sailing all the way through. So it's nice to see that we don't have the spinnaker up yet, but we're definitely surfing the waves, and I think we got some really, really interesting times ahead of us.
Yeah, definitely. Well, thankfully you're all on board with us. So have a lovely holiday season. We'll see you again soon, and don't forget the summit in Marbella. Cheers, everybody. Thanks very much. Bye now.